Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Thursday, July 15th, 2010. Well, here we go again, folks. Intraday, the market is slowly coming back in after rallying off the lows of the day. The market sold very, very sharply at around 10 a.m. Eastern Time today on the back of a Philly Fed number. The Philly Fed number, very, very ugly, ultimately disappointing the markets. The markets dropped quickly, as you can see here intraday. Look at that drop. Two-bar candle here, or just two candle drop into that 200 moving average. And again, right there, we did talk about a long play in the intraday stock chat. And look at the markets rally off those lows. So far, we have not retested the 200 officially, even as it has crept higher. You can still see we're well off that low pivot point. Now, a couple other things to go over. There was a lot of economic news this morning, and I want to go over each and every bit of it to really cover it. We saw initial claims today. Jobless claims were posted. They came in at 429,000. That's a dramatic drop. We're now below that 500,000 mark. That's the first sign of a little bit of good news that we've seen out in this market. In addition, we also had some PPI and core PPI numbers. PPI dropped about 0.5%. Core, though, was about unchanged, just right around that level that was expected. All in all, the economic news today was taken slightly in a negative tone. Now, what you can see here, first of all, we had the economic news all day long, but even before that, we had JP Chase reporting earnings. JP Chase beat earnings estimates and initially gapped higher, but quickly sold off. And you can see from the gap up here, right, really, if you take a look at the pivot high from 2 days ago and just draw that line over, you can see it was virtually up into that key double top, and at that point, JP Morgan sold off extremely dramatically, as you can see, all the way back down to this 200 moving average, or just off the 200 moving average before rallying back. So as you look across the screen, folks, you're going to see a market that is down on the day, but dramatically off the lows of the day. It actually looked right around 10:30 like the markets were going to be collapsing and have a big down day. Right now, though, to be honest, the Dow is just down about 70 points on the day. NASDAQ is down about 13, and the S&P is down about 7. So it's a minor down day after many, many flat to up days in the market. Remember, over the last 7 trading days before today, the market virtually had been up every day, basically 8% gain across that 7-day span of market trading activity. Now, a couple other things I want to go over here. First of all, JP Morgan's earnings were good, but one thing you have to remember, and this is a key little word of wisdom, when the market rallies and stocks rally up so dramatically into earnings, remember they're pricing in fantastic results. So not only do they have to come out and outperform in earnings, but they have to outperform based on the current stock price. What you can see very clearly with JP Morgan is just over the last 7-8 trading days, JP Morgan went from $35 to a high gap up today of 41. For a stock the size of JP Morgan with market caps in the hundreds of billions of dollar range, that is a huge, huge move. And we have to keep in mind that essentially this is telling us that the earnings were factored in. Yes, they were fantastic, but not good enough to continue to push the stock higher. And it was really a question of, was it even going to be close? I mean, right now they did report fantastic earnings, but there's no way they can outperform after such a dramatic upswing in the stock price. Same thing really happened with Alcoa. Alcoa, look at this. Alcoa ran up into earnings, reported earnings, and since earnings, it's sold off. Same thing happened with Intel. Every major company that's reporting, you can see clearly Intel ran up, gapped up on earnings, and then sold right off. So again, it's telling us that these earnings, the move up in the market over the last 7-8 trading days has been nice, but what's going on is the earnings are now being factored in. They weren't before, now they are. Now, if we go back to the SPY, covering a few other little details here, that's the daily chart, obviously. You can see some key levels. We're still stuck underneath this 50-moving average on the daily chart. But if we flip to the intraday chart, what you actually, again, see today, the market opened virtually flat, sold a little bit, consolidated in a bearish motion into 10 o'clock, dramatically dropped. Notice the 200 moving average, that's where we hit. Off of that 200 moving average, it rallied off beautifully and then started to consolidate all the way up and just continued to move in an upward pattern. Now, there's 2 patterns here that you have to recognize for the afternoon session, and I'm going to draw them on for you guys. One of them is a large macro, and I call them the large one macro, meaning big. Macro in spirit of bear flag. What do I mean by that? Well, here's a big down move, and then the whole day so far we've been consolidating sideways inside of this big down move. That's a macro bear flag. However, look at the micro bull flag. The micro bull flag, as I erase the macro bear flag, you can see clearly an upswing in the markets now consolidating sideways underneath this 50 moving average. That's a micro bull flag. So what this again tells us is that short term you may see an upswing in the markets, but ultimately you may head down later today or tomorrow after the upswing. And again, interestingly enough, just as I say that, the market's starting to uptick. But you have to recognize these patterns because these patterns will tell you the moves. And for instance, let's say you're looking to short this market off of this macro bear flag. What this is telling you is wait for it to pop a little bit, and then maybe once you get that in spirit of micro pattern to play out to the upside, then you short it and the macro bear flag can play out. So again, these different little facets will keep you on the right side of the trade and keep your entries as exact as possible. And again, this is stuff we go over in the nightly video in the research center, so you definitely want to join and get in tune with that so we can continue to kind of dictate where you want to be and how you want to position yourself. But again, just notice how you have this pattern and you're upticking now. That's pure and simple off that in spirit of micro bear flag. But remember, you have a micro bull flag with a macro bear flag in place here. Now, a couple other things, folks. One thing I want to point out, again, you can see the beautiful double top yesterday. This pivot high to this pivot high, that's where we called out a little bit of a short intraday, and then look, obviously the market fell down. Interesting to note, I just want to point this out as well, the market rolled over, and then look at the in spirit of bear flag that formed here. This sharp down move, choppy sideways inside the down move, you have a sideways move. That's an in spirit of bear flag. Did it play out? Absolutely it did, to a target of the 200 moving average. So again, you're seeing how, if you just know the two patterns, in spirit of bull, in spirit of bear flag, you can literally trade this market with probably about an 80% success rate. Very, very high success rate, higher than really any of these hedge funds out there are doing, in all fairness, all right? So again, keep an eye on the market in the afternoon session. Let's flip to the 60-minute chart. The 60-minute chart, a couple things to go over here as well on the 60-minute chart that I want to make you guys aware of. One thing you can still see very clearly is the macro in spirit of bear. So again, you have to pay attention to the larger time frame here. Micro time frame, the 10-minute time frame, again, on the micro sense, it does make it look like we could actually have a little bit of a move in this market to the upside, a little bit of an intraday pop, which again, it looks like it's happening. But the macro pattern, again, on the 60-minute chart clearly states down move, choppy sideways inside bars. That's a larger in spirit of bear flag, which again dictates, again, you could easily have a drop down here or down into the 50 moving average, maybe happening as early as tomorrow on the bigger time frame. And again, this bigger time frame is telling us, again, downside, but the smaller time frame is telling us a little bit of upside. And you guys know I've been talking about this for the last couple minutes. Look at the pop on the spiders intraday. In spirit of bull flag, micro pattern. This is the micro pattern. It means it's going up short term. And look at the pop on the spiders. Beautiful little upswing. Okay, so again, I love when this stuff happens as I speak because it kind of proves the point and shows you how imperative it is to learn these patterns. All right, what else do we want to discuss today? Let's talk about some key stocks. What key stocks are moving? All right, the key stocks that are moving today with the markets down slightly, and again, just to reiterate here, we have the markets rallying off their lows even more so. Dow down 55, NASDAQ down about 7, NASDAQ down about 11, S&P 500 down about 5.25. But the key movers today, Goldman Sachs. Goldman Sachs is holding up nicely today, even with JP Morgan selling off. Goldman Sachs is near the highs of the day. In fact, you have a nice little double top right up here from this little pivot this morning and this little pivot this afternoon. Now that you've hit twice, if you make your way back up, chances are you're going to break through that and at least head to this pivot high. That would be your next target. This right here would be your next target in the afternoon session if you take out this little line right here. Chevron and Exxon are selling off. We do see oil kind of a little bit on the weaker side today. It was down more, but has rallied back dramatically. Notice how oil, the USO, is now hitting into the 50 moving average. In addition, if you take a look at the GLD, gold, let's see what's going on there. Gold is flat on the day. Now, gold's an interesting chart to be flat on the day because the dollar is getting pounded today. Dollar is getting crushed. Hit a low of $24. Now, the dollar is now getting into major support and most likely due for a bounce, but it's looking like it took out the 24.10 level that we were looking at as good support intraday, and we gapped below that, actually. We haven't even retested it. So the fact, as long as it doesn't rally back to 24.10, you look for the next move on the downside, which if you go to the intraday, the daily chart, is looking more and more like it's right around here at, let's see, the gap fill would be right here. If we stretch that over, you're almost there, in fact. That would be 23.97, 23.96. So you're within about 3 to 5 cents of that on the UUP. That will be a major pivot area. And it stretches, believe it or not, all the way down to the low of that candle as well, all the way down to about 23.92. But that's your major support now that you want to keep an eye on. All right. Other than that, it looks like across the board, market again is mixed. Amazon down about $2 and change. JP Morgan still lower on earnings. Apple down about 3 1/3. Google down $1.70. So you have a fair amount of stocks down, except for Goldman Sachs. Goldman Sachs and Research in Motion bucking the trend. A couple other stocks as well that are positive. Cisco is having a flat to positive day. That continues to be strong. Stock is very, very extended short term, although it did really dump out. Resistance on Cisco is major right here, and you're into that resistance. A lot of resistance. If you get through this, you're going to go right to the 200, which will be another shorting opportunity on the Cisco chart. Left and right, just looking across the board at a couple other things. Remember today, folks, Google earnings after the bell. That will be huge for this market. And tomorrow before the market opens, GE, Citigroup, and Bank of America. So some big earnings coming out in the next 12 hours or so. Be ready for that 12, 24-hour period. It's going to keep the markets whippy on Friday. I think the first half of tomorrow is whippy and wild, and then you probably settle down pretty quickly in the afternoon as people head out to the Hamptons and the Jersey Shore to take the weekend into summer. Take care, folks. Have a wonderful, wonderful afternoon, and come join the Intraday Stock Chat or the Research Center to get the swing trades that are being posted daily here. Take care.